The Mortgage Minute today being brought to you by Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call. 800-306-1990, 800-306-1990. Every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. They don't tell us APR, points paid, or points received. They tell us the actual locked rates. 30-year conforming loans, this is as of yesterday, 6.82%. 30-year jumbo, 7.116. 30-year FHA, 6.581. 30-year USDA, that's generally no down payment rural areas, 6.66. And the 30-year VA loan, best loan on the market, 6.449. If you want our market commentary, we do provide that each business day morning as early as the data provides or allows. rsrmarketminute.com, rsrmarketminute.com. Let's see where we stand today in the markets. The S&P 500 is now up 45.8. We're looking at the 10-year Treasury. That's down 4 basis points. Mortgage-backed securities are up 21 basis points. Tells us that mortgage rates are down a little bit today. What's driving all of this? Well, we got a Powell's testimony. We talked about that a little bit. On the economy, he said the economic activity expanded at a strong pace. The labor market remained tight, but supply and demand came into better balance, and inflation has eased notably, but remains above their goal on monetary policy. He said that it will be appropriate to cut sometime this year, but that does not have enough confidence that inflation is moving sustainably towards 2%. Bottom line, there was nothing new said, and his testimony was a non-event. His Q&A session later this morning could be impactful and market moving, and we'll be watching it closely. The ADP employment report. February ADP report showed that there were 140,000 jobs created during the month, which was a little bit weaker than the 150,000 expected. The January report was revised slightly higher from 107 to 111,000. There is a huge disconnect between ADP and BLS numbers. It's important to note that BLS includes government jobs, while ADP only shows private payrolls. Additionally, ADP is showing real data that they have versus the BLS number that uses a ton of estimates and modeling. In essence, the BLS number is BS. So we're looking at the January number, again, showed 111,000 jobs created, while the BLS showed 317,000 private payrolls. Apples to apples comparison, that's a 206,000 job difference, which doesn't equate. While we see that this divergence looks like for February after Friday, we'll see this Friday. Most hiring took place at businesses with more than 50 employees. Service sector added 110,000 jobs, led by leisure and hospitality, which added 41,000. ADP also reported that annual pay for job stayers increased at a 5.1%, down from 5.2% the previous month. Job changers saw an increase of 7.6%, which was an increase from 7.2%. This was the first increase in changes that we have seen in 19 months. These figures have still been trending much lower from the peak we saw 2 years ago, when pay was up 7.8% for stayers and 16.4% for switchers. January JOLTS data, the job opening and labor turnover data, showed that there were slightly less job openings. December was initially reported at 9.026 million and was revised lower to 8.9, while January data fell further to 8.863 million. This data is slightly does not have an impact on the markets. ISM services index for February fell to 52.6 from 53.4, and that was just below the estimate of 53. Within the report, prices paid, which is an inflationary component, fell a material 5.4 points to 58.6. While this is still above 50, it's a big decline and is in the service sector where we're seeing most inflation. The employment component fell to 48 from 50.5, and as a second month in the past 3 below 50, another point of evidence to a slowdown in the rate of hiring. Black Knight released their appreciation data for January, showing that home values rose 0.2% in the month and remained up 5.6% on a year-over-year basis. MBA mortgage applications for the week showed that purchases rose 11% last week and are now down 8% year over year. Refinances rose 8% last week and are down 2% year over year. Refinances are 30% of the market. Now, why would you be refinancing? Not to get a lower rate, because rates are higher than where they were. So why would somebody be refinancing? It's because they're looking to get rid of debt consolidation. Go to rsrdebtfree.com, rsrdebtfree.com, and you can get the current data on there and see how you can get rid of your debt, either with a cash out refinance, a debt consolidation loan, because most people don't understand their blended household interest rate. Or you can do that by calling our friends over Chris Corrales. He can help you with getting rid of the debt if you don't have equity in real estate. So either way, there are methods of getting rid of some debt. You just have to go rsrdebtfree.com, rsrdebtfree.com. That is the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990.